Hi everyone, welcome back. Today we're going to end with the saving and the retiring with disabilities. I'm going to do the part two. This one, on part one, I told you everything about the disability tax credit certificate, and on part two, we will go over the registered disability savings plan, the RDSP. This is a plan that the government introduced back in 2009, and it's a very comprehensive plan that it can give a person with disability the advantage. It's hard to beat for a person with disabilities to save into these plans, or with the sponsor of that person to save for the person with disabilities into this plan. So let me show you what I prepared. This is very broad. It's a very broad plan because disabilities are very, very different, and the plan has to accommodate all different circumstances. But what I did is I prepared a short presentation on the most important, most relevant aspects that affect to all of us. For everyone is the same rule. So let me show you how that works. So I'm going to go step by step. So first, let's take a look at who can be a beneficiary of a registered disability savings plan. To become a beneficiary, I mean the person with the disability, you must have a disability tax credit certificate. This is something that I've done on the previous video on disability, on the part one. And you also have to have a social insurance number, be a resident of Canada at the time of opening the account. On the year of opening the account, the person must be a resident of Canada, and any year that there are contributions to the account, the person must be a resident of Canada. And you must be under the age of 60. 59 is the maximum, the oldest age at which you can open this account. And well, after 60, there's no more contributions. So who can open the account, the RDSP account? Well, if the beneficiary, the person with the disability, is under the age of 18, then the legal parents of the beneficiary, or the guardian or a tutor or any institution that is legally responsible, any public department or agency that are legally responsible for the beneficiary, for the person with a disability. If the person with the disability is over the age of 18, well, then if the person is contractually competent, if the person can understand, the disability doesn't prevent them to understand how an account works and the legalities, so then the beneficiary, the same person with the disability, can open the account. And if not, if not contractually competent, then the same rules as under 18 apply. The same people can open an account on behalf of the person with a disability, and anybody can make contributions to this account. So anybody that is authorized by the sponsor of the account, by the person that opened the account, they can make contributions into the RDSP. So how does it work? There are two main grants. One is a grant, is the Canada Disability Savings Grant, and the other one is the Disability Savings Bond. Okay, they're a little bit different, one from each other, so let's take a look at each. The Canada Disability Savings Grant is if the family income, and family income is, in the case of a person under the age of 18, that will be typically the parent's income. If the family income is less than $98,040 per year, so then on the first $500 contributions, the government will contribute $3 for every $1 contributed. So if you contribute $500 into the plan, so then the government will contribute $1,500 that particular year. And on the next $1,000 contribution, that means that now you're contributing 500 plus 1,000, you contribute 1,500. On this 1,000, per every dollar, the government is going to contribute $2. So for a maximum up to $2,000 per year. So in essence, what happens is, in this case, if you contribute the maximum, Well, there is no maximum, but if you contribute the $1,000 and the $1,500 for the year, the government will contribute the 1,500 and the 2,000, so $3,500 for the year, which makes it a wonderful account for a person with disability. Great help. Now, what happens when the family income is higher than $98,000 per year? Well, then from the first $1,000 contributions, the government will contribute $1 per every $1 contributed. So up to $1,000 maximum per year because it's only on the first thousand. So in this case, if you contribute $1,000 per year, the government will contribute an extra $1,000 per year. And then we have the Canada Disability Savings Bond. And the saving bonds works differently. It doesn't require any contributions to begin with. So you just have to open the account. The government will deposit into that account up to $1,000 per year for a maximum of 20 years, and this has to start by age 49. So the RDSP needs to start maximum age 59, but for the disability savings bond to receive this amount, you can receive it up to age 49 only. So because it's $1,000 per year, if the account hasn't been opened by age 29, so then you're not going to maximize the 20 years, and eventually you're going to receive less than $20,000. So how does it work? Who receives this? When the family income is less than $32,000 per year, so if this is the situation, then the bond will be $1,000. No questions asked. The government is you open that account, and the government will deposit $1,000 into that account. Remember, the family income is the income of the typically parents when the disabled person is under the age of 18, and the person itself when they're over 18. But family income will be the person with the disability, and if they're married, combined with the spouse's income as well. So if the income is less than $32,000 per year, the government will contribute $1,000 per year for a maximum of 20 years, but maximum up to age 49. If the family income is between $32,000 and $49,000 per year, so the bond declines proportionally for a formula that is in the Canada Disability Savings Act, and if it's over the $49,000, there is no bond is paid. No Canada Disability Savings Bond will be paid. And then we need to look at taxation. What happened with taxation? Well, say contributions are not tax deductible. So the money that you deposit into this plan, you cannot deduct it from income tax. And then withdrawals, the contributions portion is non-taxable because it hasn't been deducted before. However, all the grants, the bonds, and the investment income, this money is invested and it earns money, all this will be taxable as income. So when you make withdrawals from this account, typically starting at age 60, and this is for retirement, let's say, so the withdrawals are going to be a mix of contributions, grants, bonds, and investment. And the financial institution where you're holding that is administering the plan, they know exactly which one is which and which portion is taxable. So be prepared. You have to pay tax on most of that money. Only on the contributions you're not going to be paying income tax. So these are the main components, the main aspects of the disability savings plan. If you are interested in opening one of these accounts, I recommend you to contact your bank, to your branch, and arrange an appointment with the financial advisor, wherever you're banking, and tell them that the appointment is because you're interested in registered disability savings plan, and they will guide you through. It's fairly simple. If you have any questions, of course, you can, or comments, you just can leave them below the video, and I will do my best to answer everyone. Other than that, thank you for watching. I hope you find this information interesting, please subscribe to the channel. You're going to do yourself a favor, and you're going to do me a favor as well. It's free of charge, and it takes only a click. And don't forget to click on the small bell beside the button that it says subscribe, because that way you will be notified when I upload the video. So thank you for watching, and I'll see you in the next video.